Welcome to this explainer. Okay, today we are diving into a really fascinating concept for all you focused learners out there wanting to level up your market analysis. We're talking about the break and retest trading strategy. Let's explore how this super conservative, high probability entry method can help us pinpoint those optimal entry points, all while keeping our capital safe and sound. Okay, let's dive right into our agenda. First up, we'll look at the false breakout trap. Then we'll get into break and retest explained. Third, we'll walk through a 5-step execution process. Fourth, crucial risk management rules. And lastly, strategy pros and cons. All right, part 1, the false breakout trap, also known as the trader's ultimate villain. Honestly, are you just completely tired of getting caught in false breakouts? I mean, if you've been trading for any amount of time, you know the exact agonizing frustration I'm talking about. You see a price pushing past a major resistance line. Your adrenaline spikes, you buy the absolute top out of sheer FOMO, and then, almost instantly, you just sit there and watch the market entirely reverse direction, leaving you totally trapped in a losing position. It's the worst. So by definition, a false breakout is a situation where the price temporarily breaches a key level only to quickly snap back and reverse direction, trapping early, eager traders. It's literally the ultimate market fakeout. You thought you were getting in on the ground floor of a huge move, right? But instead, you ended up buying at the absolute top or selling at the absolute bottom. Well, good news, because this is the exact problem our strategy is going to solve today. Moving on to section 2, break and retest explained, the high probability solution. You know, the core mantra of this entire strategy really just boils down to this. Patience pays off in trading. We actually need to start viewing the wait for a retest as a massive strategic advantage rather than just a missed opportunity. While other traders out there let the fear of missing out dictate their entries, we're going to use patience to lock in a much more conservative, high-probability entry. And this brilliantly illustrates the theory behind it. Imagine the price of an asset has just been bouncing between support and resistance, totally unable to break through. Then, finally, it surges right above the resistance line. Now, instead of jumping in right there at the absolute peak of the breakout, the disciplined trader waits. They wait for the price to come back down and essentially retest that old resistance level. If the price holds steady there, well, that old resistance has officially become a brand new support level. This confirms the breakout was totally legitimate, and it significantly reduces your risk of getting caught in a failed move. All right, let's jump into section 3, the 5-step execution process, a live chart masterclass. Here is your structured roadmap. Execution requires 5 specific, strict actions. 1, identify a key level. 2, wait for the breakout. 3, wait for the retest. 4, confirm that retest. And 5, only then enter the trade. Let's actually look at a live market example to see exactly how this plays out in action. Step 1 is to identify a key support or resistance level. Take a look at the highlighted zone here on this Euro GBP chart. It's pretty easy to spot a really strong support level, where the price has repeatedly struggled to break lower multiple times. We've even got a little false breakout marked right down there below the line, where the price dipped and just popped right back up. So this support zone right here, this is the absolute foundation for our entire setup. Moving right along to step 2, wait for a breakout. So, after a little while, the price finally forms a decisive bearish breakout, pushing well below that highlighted support zone. This drop is crucial because it confirms that market sentiment is officially shifting bearish. The sellers are gaining control and the price definitely looks like it wants to keep falling. But remember our mantra, we have got to resist the urge to jump in immediately. And that restraint is exactly what brings us to step 3, wait for the retest. Look at how, instead of just entering the trade right after the breakout, the price actually pulls back up to the old support line. Now, this retest phase is the ultimate test of your patience, and I can't stress this enough, it is absolutely crucial to the strategy. The underlying idea here is that the previous support level is now going to act as a brand new resistance level. Now, what's really interesting about this step is the confirmation. When the price comes back up to that level, you can't just blindly jump in. You need actual proof that the new resistance is going to hold. This could be something like an oversold RSI reading, or, as we're seeing right here, a specific candlestick pattern. The price formed a very clear bearish engulfing pattern right at that retested zone. That right there is our definitive, undeniable signal that the new resistance is holding strong and giving us a much safer entry point. Which brings us to our final step, step 5, enter the trade. Once you're fully confident that the retest is successful, which in this case is right after that bearish engulfing pattern closes, it is go time. You open a sell position to capture that downward momentum. But notice how we're defining our parameters here. You've got to place a stop loss just above the new resistance level to protect yourself just in case the market does something crazy and unexpectedly reverses. And for your take profit, you set a target at a recent swing low. This creates a highly structured, super calculated trade setup.
Next up, Section 4, Crucial Risk Management Rules, because we absolutely have to protect your capital.
So, here is a golden number to burn into your memory: 1 to 2%. Position sizing is all about how much of your account you're actually risking on a single trade. And risking no more than 1 to 2% of your account on any given setup is literally the golden rule that separates the true professionals from the gamblers. It's that simple. Doing this ensures that even if the market totally moves against you, the loss isn't going to wipe you out. You'll survive to trade another day. Let's detail these strict parameters a bit more. First off, as we saw with the chart, always place your stop loss just beyond the retest level. If the retest fails, you get out immediately. No questions asked. Second, absolutely stick to that 1 to 2% position sizing. Third, you've got to avoid over-leveraging. Using moderate leverage keeps you focused on consistent, long-term profits rather than trying to force a home run out of every single trade. Over-leveraging can literally turn a tiny, totally manageable loss into a totally catastrophic one. And lastly, once your trade is live, don't micromanage it. Just stick to the plan you made when your head was clear. And finally, Section 5, Strategy Pros and Cons, a Balanced Reality Check. Now, obviously, this strategy has some incredibly fantastic benefits. It's visually pretty easy to recognize, it actually works across multiple timeframes, and it is highly profitable specifically because it vastly reduces your risk of falling for those nasty false breakouts. You're basically forcing the market to prove its direction to you before you hand over your capital. However, we've got to be real here. High market volatility can still create false signals. A market might briefly retest a level and then still reverse on you. Plus, waiting for that absolute perfect setup requires intense patience. It delays your entry, and yeah, sometimes the market will just take off without giving you a retest at all. So while it's highly effective, it's definitely not foolproof. Which brings us to our final thought, and a question I really want you to seriously ponder today. How will you incorporate this kind of patience into your own personal trading plan? The break and retest method truly sits right at the sweet spot for methodical traders, and it's an incredibly powerful tool when you combine it with your broader market analysis. So my challenge to you is to open up your charts today, look back at some historical breakouts, and just observe for yourself how often a disciplined wait for a retest would have either saved you from a losing trade or totally optimized a winning one. Thank you so much for joining me in this explainer, and happy studying.